Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Thursday, 2nd October. Coming up on the show, OpenAI becomes the world's most valuable startup. It's now worth $500 billion. The markets seem to have shrugged off the government shutdown, but around 750,000 federal workers are expected to be furloughed. And Tesla will report its latest quarterly sales data. I'll explain why they'll be their strongest numbers this year so far. So grab your coffee and let's own the morning. Well, the first thing you need to know is that OpenAI has become the world's most valuable startup. The ChatGPT owner has completed a deal to help employees sell shares in the company at a $500 billion valuation. That means it is now more valuable than Elon Musk's SpaceX, which is worth just a mere $400 billion. Current and former OpenAI employees sold about $6.6 billion of stock to investors. That included T. Rowe Price and SoftBank. Now, the next thing you need to know is that equity markets seem to have shrugged off the government shutdown. This is where the markets closed last night. So let's take a look. Now, stocks teetered throughout the day on Wednesday, but ended in the green with the Dow Jones and S&P 500 hitting record highs. Now, as we know, there'll be no jobs report on Friday, but yesterday we did get the ADP report. It confirmed signals that a labour slowdown is afoot, cementing bets that more interest rate cuts will land this year despite sticky inflation. And the last thing you need to know is that the Trump administration is ramping up its pressure on Democrats as the shutdown enters its second day. The White House has frozen $18 billion in New York City infrastructure projects and a total of $8 billion in climate-related projects in 16 states that voted for Kamala Harris in 2024 have either been paused or cancelled. As many as 750,000 government workers are facing being furloughed too. Well, to get more on the latest on the shutdown, I'm joined by Yahoo Finance's political correspondent, Ben Werschkel. Ben, thanks for joining us here on Market Sunrise. Now, I mentioned how Trump seems to be ramping up the pressure on Democrats during this shutdown, but there's more to it than just that, isn't it?
For sure, yeah. One of the interesting themes of this week we're seeing from Trump is kind of an all systems go approach on economic issues in this shutdown. The Trump overnight again described a shutdown as an opportunity for Republicans to save billions of dollars. The word he used was dead wood that they could cut out. This is a reference to his idea for mass firings, but it's emblematic of a kind of larger economic approach. One thing people may not realize, where the government shut down, tariffs are still being rolled out and tariff investigations, which are important, are still going on. Trump is still making plans for a $20 billion currency swap with Argentina. All these things are going forward as part of we're not going to let the shutdown slow us down. It's part of an effort to up the political pain on Democrats as much as possible, but also to achieve some policy ends that Trump has been talking about for months. All of this comes, of course, as the economic effects of this shutdown are beginning to be felt. The jobs report is scheduled to go out tomorrow. At this point, given the status of negotiations, there's more or less no chance that happens. The data, again, has been gathered, but it's going to be delayed at least for a couple of days. And so we're going to start to see these economic rollouts as Trump himself clearly is not slowing down on his priorities.
And Ben, what about the political implications at the moment? We had a failed vote yesterday. Are we expecting any more attempts today?
So today, there's talks are going to continue, but it's Yom Kippur, so there's not expected to be any votes in the Senate. There'll be back and forth, but I think the overall sense here is folks are settling in for what could be at least a few days shutdown, perhaps even longer. The Senate will be back tomorrow, so there's going to be more votes there, but this could be another repeat of what we've seen of kind of failed votes on both sides and no compromise plan in the offing. A lot of folks are looking towards Monday as the next time when all lawmakers are going to be back in Washington. All talks could go forward. Things could change. One detail for tomorrow is that Senate Majority Leader John Thune and Senate Minority Leader Chuck Schumer could meet. This would actually be one of the first times they've met since that White House meeting that didn't go so well. So there could be progress on there, but the actual implementation of the end of a shutdown, I think we're talking about days as opposed to hours for certain.
Now, what about federal jobs? Are we right to be just talking about furloughed workers, or will we see mass firings that Trump has spoken about in the past?
Yeah, so this is the kind of one of the big X factors that's different about this shutdowns. I've covered a lot of shutdowns over my career, and this is the main difference here. There's about 750,000 furloughed workers. These are workers that are being sent home, stopping to work, stopping their pay, with the idea usually that they come back at the end. There's a large universe, about 2 or 3 times that of federal workers who are being asked to stay on the job without pay, but continue their work. I think TSA agents, things like that. All of these workers are operating under this cloud of uncertainty about this mass firings question. Trump, in his post overnight, was talking about him again. His budget chief, Ross Vaught, has talked about how these could start within a day. This could start today, tomorrow. He gave a 1 to 2 day deadline, so that could begin. I will say there is some skepticism about exactly what these look like and how deep the Trump team is willing to go. Other Trump officials talk about this as less dramatic than you might think. There was one from his top economic aide talked about this as restructuring HR departments, which is a very different thing than cutting billions of dollars. So exactly how this works out remains to be seen, but it's definitely weighing on the workforce at this time. There's reports of workers being sent home with different computer setups so that they could be potentially notified for this. So there's a lot of questions about how this works out and how quickly it works out, depending on how long this shutdown goes for certain.
Well, still a lot of uncertainty there. Ben Werschkel, our political correspondent in Washington, many thanks for your thoughts. Okay, we're heading for a short break, but coming up, why October is a historically volatile month for stocks and what investors can do about it. That's next on Morning Brief, Market Sunrise. Stocks tend to decline in the month of October in a phenomenon known as the October effect. Yahoo Finance's Jared Blickery takes a closer look in today's Stocks in Translation.
The fourth quarter is upon us, and October has a volatile reputation in the markets, which it has earned. It's where the pressure tends to build and where it often releases in many years, letting the market sail into a year-end soft-bedded Santa Claus rally if history repeats itself. Today in Stocks in Translation, we are breaking down the volatile seasonal tendencies of this storied fourth quarter. And let's start with the beginning with a definition of a market crash. It isn't just a bad day. It is a sudden, steep drop that vaporizes value in days or weeks, often fueled by panic and forced unwinds. That's when selling itself causes more selling. And although we've seen market crashes in just about every month of the year going back a century, for some reason, some of the big ones have clustered in the second half of the month of October. Now let's take a look at some of them. Nearly 40 years ago in 1987, so-called Black Monday on October 19th became the template for modern panic, as the Dow crashed over 20% in one day. But on October 24th, 1929, nearly a century ago, Black Monday kicked off the bear market that marked the beginning of the Great Depression. Also on the 24th, but in 2008 this time, after the fall of Lehman Brothers amid the global financial crisis, the VIX Volatility Index hit an eye-watering 89.53, an all-time high that survives to this day. Then on October 27th in 1997, we had a mini crash which triggered the first market-wide circuit breakers in the modern era, which were put into place after that 87 crash. The good news is not every year has these cataclysmic events. So let's take a look at what's happened quarter by quarter in the S&P 500 since 1990, something we call seasonality and like to talk a lot about here. What jumps out is the outsized median return in Q4 to the right of your screen, 6.5%, which tends to be positive over 80% of the time. Compare that to the first 3 quarters of the year, which tend to see returns of less than half of that in the 2% range, with only about 2 and 3 years being positive. And even when October spikes lower, November and December tend to grind higher historically. In this chart here, we've sliced and diced the data a little bit differently. We're only looking at the first year of each president's 4-year term, going all the way back to 1949, which has happened 19 times. Here, Q4 is still the best, with a median return of 5.5% and a win percentage that's near 80%, pretty close to the prior map. You can also see how returns tend to get better each quarter as the year progresses. Now let's take a look at what typically happens in the VIX Volatility Index each year. That's in white versus what's already happened in 2025, which is in green. Notice how the white line climbs higher in August, September, and October, then it peaks and falls into year end, That lower year-end volatility is what typically supports predictable December gains and the so-called Santa Claus rally at the end of the month. But I should point out that in 2018, we had a near bear market in December, which had the worst return since 1931. Guess what? That was also when we had the last government shutdown. But as we showed earlier in the week, shutdowns don't tend to rattle stocks too much. They're more of a bond market mover. So what should investors be watching right now? Let's start with that economic data, assuming it's even released on time. The monthly jobs numbers are scheduled for Friday, October 3rd, while CPI inflation is set for Wednesday, October 15th. But watch out for shutdown-related delays. There's also a Fed meeting at month end, but that shouldn't be affected by government closures. Then earnings season will set the tone when it kicks off in mid-October with the big banks. Listen for margins, investment forecasts for 2026, and how the AI spend is progressing. Then, as earnings season matures, the corporate buyback window reopens, a topic we recently covered here on Stocks in Translation. After companies report earnings, they can buy back their stock again, which supports the markets. And speaking of markets, watch the dollar and bonds. That's where trouble usually shows up first. Big movements sometimes spill over into stocks. Bottom line, October may bring the thunder, but history says that the sun usually breaks through before year's end. And tune into the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.
Coming up, we're looking at today's trending tickers. We'll give you the news behind the moves. Next on Morning Brief, Market Sunrise. It's time now for today's trending tickers. We're watching SK Hynix and Samsung, Alibaba and crypto stocks. First up, SK Hynix and Samsung are rising after announcing partnerships with OpenAI to build data centers in South Korea. The news sending SK Hynix to an all-time high yesterday and adding $37 billion to the combined market cap of the chip makers. All right, next up, it's Alibaba, and it's getting an upgrade at JP Morgan, raising its price target on the company's Hong Kong shares by nearly 45% to a street high. Analysts citing an improved cloud revenue outlook and growing synergy between its AI and e-commerce operations. The stock soared in September after the tech giant announced plans to hike AI spending and up nearly 3.5% in the pre-market in Hong Kong. Okay. Finally, crypto stocks are rising as Bitcoin hovers around $119,000. Investors seeking safety in the cryptocurrency amid the government shutdown. Now, you can track the best and worst performing stocks with Yahoo Finance's trending tickers page. Okay, now Fermi is extending gains after soaring more than 50% in its trading debut. Yahoo Finance's Josh Lipton spoke to the CEO about how the company is planning to power data centers with natural gas plants and nuclear reactors. Take a listen.
Well, I think, frankly, our customer set is probably 10 of the 15 largest companies in America. Those that are needing AI compute at the greatest scale. And so what they look for us to do is we unshackle their business model from the grid and create for them their own private utility so that they can grow their business at scales and speed that they have not been able to achieve on the grid. So when you think about our total customer group, it's relatively small, but when you think about the collective market cap and cash flows associated with those companies, it's staggering.
There are folks, Toby, obviously others who are just as interested, just as excited as you are about this space. What is going to set you apart from the rivals? What's going to be your competitive advantage?
It's really two things. Number one, a lot of the people currently in the space come from a background of real estate or artificial intelligence. When you look at the Fermi America team, we're energy people. We're going to be really good at generating a lot of dumb electrons. The second thing is our site location. When you look at our site, which is almost 7 central parks, so it's a very large site, it has the key attributes that you need to create electrons at scale. Large supply of natural gas, a large, abundant number of pipelines to deliver that natural gas, the water to cool it, the fiber. We have highly redundant fiber at our site. We have permission because our site is owned by Texas Tech, therefore it's owned by the state of Texas, so we have the permits. And then from a nuclear perspective, we sit adjacent to America's most important nuclear site.
Let's dig into the financials a bit, Toby. You aren't yet generating revenue. When would you start receiving revenue from tenants?
Yeah, we expect to receive revenue from tenants to begin construction for our first customer imminently. And our projections for 2026 is our first customer will be online. So we will be generating meaningful revenues in 2026 with, as we've said in our S11, 2027, we're looking at, net operating income in excess of $900 million based on the customers that we currently already have working.
Yeah, I just want to dig into that forecast, Toby. What would be your profitability timeline looking out?
We expect that net operating income to be $900 million in 2027.
2027. Okay.
The way so we again, what we're doing is we're not we have the generation sets, which it makes us, we've accumulated over 2.5 gigawatts of power generation equipment, which is roughly half of a Manhattan. So we're going to be able to put that equipment to work profitably because we're going to be one of the largest, most reliable source of electrons for America's biggest companies over the next decade.
Okay, that was Josh Lipton speaking to the CEO of Fermi. And as I said, shares spiked yesterday on its IPO, up 55%. And look at it in pre-market, up around 16%, as you can see there. So doing pretty well in the pre-market too. Okay, let's move on. Now, later today, Tesla is expected to report its strongest quarter of the year, thanks to a rush by US consumers to secure a $7,500 EV tax credit that expired at the end of September. Wall Street pegs Tesla's third quarter deliveries at about 441,500 vehicles, with full year 2025 at roughly 1.6 million. That's about 10% below last year. So will EV sales fall off a cliff now that buyers won't get a tax credit on them? Well, Yahoo Finance's Josh Lipton asked just that to Erin Keating, Cox Automotive's executive analyst.
Consumers rush to get their hands on electric vehicles before the expiration of the EV tax credit. Automakers Ford and GM getting a boost, seeing records for EV sales in the third quarter. But now that tax credit is in the rear view mirror, and we're looking at the road ahead for the auto industry and dealers. Cox Automotive executive analyst Erin Keating joining us now to discuss. Erin, it's good to see you. So not surprising, right, Erin? We expected and we got strong EV sales from Ford and GM. But let's look ahead now, Erin. You look at that EV market, you take out your crystal ball, Erin, post-subsidies. What do you think that EV market looks like here in the U.S.?
Well, thanks for having me, Josh. I always enjoy talking with you about the car industry. And to be honest with you, we don't see that things are going to fall off a cliff. Look, we're going to see a speed bump here with demand. But we already heard today, even in some of the sales release calls from the manufacturers and from articles that came out yesterday, that GM, Ford, Hyundai, they're all still holding on to some really decent incentives to continue to juice the market for the EVs. So until inventory really draws down towards the end of the year, I think that we're still going to see some really good deals on EVs. Just because the EV credit went away, yes, that might hurt it, but we're now going to get to see the EV in the wild, if you will, see what the market really shows. And we've got a lot of EVs hitting the streets over those last couple of months, which means that attention is more on them, and we might start seeing more and more people getting used to seeing EVs and wanting to buy more. So I'm a little more bullish than maybe others are on how EVs are going to do in the future.
Well, let me get your take on this, Erin, because I saw reports, Ford's Jim Farley was talking about this yesterday, and it sounds like Farley expecting demand for EVs to be cut in half next month following the end of these tax incentives. And I'm just curious what you made of that statement.
You know, it's funny. I was listening to then Randy Parker this morning on his monthly sales call, and he said quite the opposite. And so I think it depends on which manufacturer you are, what is your plan for electric vehicles, and how strongly do you sit in that portfolio line. We know that Hyundai, as an example, has really invested. They're very EV forward, very electrified forward, and they're going to be invested in continuing to make sure that that powertrain gets adopted at a larger scale in the US. And I think there's quite a few other manufacturers that are going to do the same. Now, we've already heard of some cancellations or slowing in production, and that will sort of help us see what demand looks like versus sales and supply. But I don't think that the 5%, cutting it in half over the next month is terribly realistic.
So we're talking Ford, we're talking to GM, Aaron. What about Tesla? Because Tesla deliveries, they're on deck as well. I'm curious what your expectations would be there and ahead.
Yeah, I mean, I think Tesla's going to continue to compete, right? They are the one brand that's easiest for them to adjust their pricing up or down based on what they're seeing in the market. And the only shot they have in the market is an electric vehicle, right? So I don't know that they're the most natural competitor to look at, because by the very virtue of what their portfolio of vehicles are, they have to juice the sales, so to speak, on EVs if they want to continue to get their sales numbers in. But they have been quietly losing share based on the fact that there are a lot of other alternatives in the market. And those alternatives are hot sellers right now, even right up until the deadline as of yesterday. And I think we'll continue to see that trend move on.
Okay, well, before we go, let's have a check-in on the markets. Let's start with gold. And gold futures, well, they look like they're taking a bit of a breather, but they still remain close to those record highs. Let's move on to Bitcoin. And still surging ahead. The shutdown seems to have given crypto a bit of a boost. In fact, over the past 5 days, Bitcoin is up over 8% and it's up around 2% today so far. Okay, let's move on to the Asian boards now. And chip sector shares were prominent in leading Japan's Nikkei higher. That's despite the pressure from a stronger yen versus the dollar. And of course, there were big jump in the tech-heavy indices in Taiwan and South Korea, as you can see there. SK Hynix and Samsung obviously giving the Kospi there a bit of a boost. In fact, the Kospi hit a record high too. Let's turn over now to Europe and the FTSE 100. Well, look, it's down a little bit, but earlier it did hit another record high, almost flat there actually, in early trade. Technology and auto stocks are leading gains in Europe, while utilities were the biggest drag in the region as a whole. All right, and let's see how Wall Street could open once the opening bell rings. And futures, well, they're little changed actually overall. As you can see, investors seem to have shrugged off concerns tied to the latest government shutdown and now focus more on rate cuts, which they still believe will go ahead after those ADP numbers yesterday, which showed weakness in the US labour market. All right, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Ali Kalal ahead of the market open on Morning Brief. I'm Ramzan Karmali. Go own the morning.